Even at the interbank market is at 305, the CBN's spot rate, and if you compare that rate at 285 to what the market is pricing, you could see that there's some form of advantage. So the point is that for us to see a clear-cut sentiment that will be positive towards the oil and gas sector, we need to fully liberalize, because at the rate that we are now, but for the 285 naira FX agreement with the central bank, we should have seen some form of adjustment. You notice that we've seen some form of oil price, movement between the time that was agreed and now. But there has been no price change in the pump price, So if you're going to move towards a market reflective, pricing of that sector, then we need to begin to talk about rejigging the so-called liberalization template, which, of course, the ELGP addressed.
Give us an insight into what you expect to see when the rest of this sector start reporting. But let's start with these two companies that looked a little bit similar, Oando and Seplat. Again, I included Oando because it does a little bit of the exploration and upstream business, but also big on the downside, while Seplat is basically E&P.
Okay, so if we start with Seplat, you notice that from the third quarter number that was released, from the revenue figure of about 113 billion naira in third quarter 2015, revenue had been down to about 47 billion naira by third quarter 2016. That's quite clear. The reason is because we've seen a fall in global oil prices, of course, which affected the business, a whole lot. And that is not expected to change when they release their results in full year, because, of course, the production cut deal was reached in the last quarter of 2016. So
between OPEC and OPEC,
yes.
On the price side.
So on the price side.
But on the local side, where Seplat does business, where the militants have been very reasonable and quiet over the last couple of months, and we saw increase in Nigeria's output in the final quarter.
So that's also a bit of a challenge for explorers like Seplat. They faced a lot of those challenges in 2016, and that is expected to reflect in their numbers by the time they publish their full year earnings. For Oando, it's been a different ball game, even though the company has been reporting good revenue numbers, but from their cost line down from direct cost even to their operating cost, you've seen a lot of pressure, from that angle, and that's been constituting a lot of negative retained earnings, which is, of course, impacting a great deal on their shareholders' funds. So in their 2016 full year numbers, we don't expect anything to excite. So if you look at
because 2015 was really nasty for Oando.
It was really
almost
very bad.
200 billion naira.
True, it was really very bad for them. So for them, we are not expecting that any results from Seplat or Oando is going to breed a positive sentiment for the market. The ones we're quite positive about are Total, Mobil, and perhaps Conoil, but Conoil,
Conoil managed to be able to escape in 2015, 2016. Surprising numbers from Conoil. You thought this was going to be bad. They suddenly came out very nicely, went a little bit just above the line, above the water. Then you saw MIS also seem to just keep the head above the waters, as it were.
Yeah. So
2015.
So again, but in 2016, the positive for all of them, the downstream players, the big seven, excluding perhaps Seplat and Oando, was the fact that we had that liberalization. So if you analyze market performance year to date as we speak, but for the exception of FO and Seplat, which have been, of course, major drag to market performance, the sector's performance, you will have seen that most of other players in the sector have been upbeat. The same story was recorded for 2016.
1 minute or about 2 minutes, a minute and a half of your time into Forte Oil. This was a stock selling almost 400 naira per unit, now at almost just about 52.
Well, we've always had an opinion. At some point, our recommendation for Forte was under review for a long time because, I mean, there was this large disparity between what market was pricing and the fundamentals, you know. So we think that the market is perhaps just adjusting, you know, towards, you know, moving towards what the fundamental pricing of that stock is saying at the moment, you know. So we would believe that what you're seeing in the market now is much more tilting towards the fundamental pricing of 40. For us, it has always been overvalued, and this is a clear-cut correction in that pricing of the market.
Quite a lot to chew here when the numbers start coming up. But most likely by then we'll be getting you back in the studios and your team to talk us through this. And now you deserve a second handshake.
Thank you, boss.
Thank you. Early morning hours for Head of Research. We know what it means to make it to the studios. Thank you very much. And get back to your desk.